Friday, May 15th, 2020, Monaco 64, home of alternative economics and contrarian views. Billy is very happy today because it looks like silver is starting to make its move. I know we've had a lot of false starts in the last 4 or 5 years for silver, or even more. It's been a frustrating metal to own, but I think it's worth it. As Jim Sinclair said, when silver starts going, it's like gold on steroids. And I think everything technically, fundamentally, is pointing to higher silver prices and a big outperformance relative to gold. Does that mean I'm going to get rid of my gold and buy silver? No. My preference is to have as much of both as possible. Yes, maybe I will favor buying silver over gold these days. And of course, silver is cheaper to buy, so it's probably a better deal. But it doesn't mean to say that I won't try to buy gold either. I think both are great to have to protect yourself against the madness of the central bankers. And I listened to an interview that the FT did yesterday with the governor of the Bank of England, Andrew Bailey. Andrew Bailey took over the Bank of England right in the beginning of this crisis. Well, in the middle of it, I would say, 15th of March. Before that, he had a stint at the FCA. I would say he didn't really do a great job there. Granted, we always focus on the failures of the FCA and not the successes, but we saw a lot of small investors lose billions in some mutual funds, in some mini bond investments under his watch. We'll have to see how he does as Bank of England governor. Of course, he hasn't been there for too long. But why am I bringing this up? Well, to show you how important it is to have precious metals. One of the things he said is this, and I quote, "Although things have calmed down a lot, there is an underlying fragility in the system." So that's one of the things he said. The other thing he said is that as far as bank stress tests or financial stability stress tests, he doesn't really, or the Bank of England doesn't really include rising interest rates under those stress tests, which I thought was really unusual. And it doesn't really provide for all the possibilities. Why do I think he did that? Well, because I think he knows that they can just create as many billions or even trillions of fake money or pounds, whatever you want to call it, out of thin air to buy government bonds to keep the interest rates low. And the interviewer asked him, this is looking more and more like monetary financing or debt monetization, which means that they're buying the debt from the government. And Andrew Bailey laughed and he said, well, there is no fiscal dominance, which I think he means that the government is not telling them to do it, but implicitly they are, I think. The other thing he said is that the fact that they're paying interest on excess reserves will make sure this is not a problem, all the money printing. What does that mean? Well, that means that all the money that's being printed and going to the banks are coming back and putting that with the Bank of England under excess reserves and being paid interest. Instead of putting it into the real economy, he thinks that will stop the inflation. And I'm not too convinced. When you listen to the interview, he's been brainwashed as well. And the interviewer as well. into thinking that inflation is the CPI. He doesn't realize, or maybe he does and he doesn't want to be honest, that what he's doing by printing money, 200 billion at a rate of 60 billion a month, that's inflation itself. As the old Webster dictionary that I have, the pocketbook from the 70s, says, inflation is the abnormal creation of money and credit resulting in the rising level of general prices. So the central bankers, the mainstream economists, they've totally turned that around. And now they call the consequence of inflation inflation. So of course the CPI is going to be doctored, and he says the CPI is looking like it's going to zero, but the CPI is not inflation. You need to remember that. And that's one of the reasons why I think silver and gold are still important. There has to be a valve for investors and for those who want to protect their savings. The Bank of England note is not real wealth. If you can conjure up a couple of 100 billion in 3 months, and it looks like that's what they're planning to do, 200 billion every 3 months. We'll have to see. He said they're doing 60 billion a month. They announced 200 billion in March, so that's about 180 billion after 3 months. We'll have to see what they do at their next meeting. They didn't announce anything at the previous meeting. So yeah, the fundamentals are there. In the UK, the Federal Reserve is going to keep doing the same thing as well. So a little bit more about silver. I mean, yeah, silver is kind of a hybrid compared to gold. Gold has industrial uses, but very little industrial uses. Gold is more money, right? And but silver, of course, is been money before. Central banks, of course, don't hold silver anymore. But if you look back in history, silver has always been the money for the masses, and it's also been money for change. Gold a lot of times is very valuable, and you need change. People have used silver for everyday transactions. Even in the Renaissance in Florence, for example, I've been reading this book. I'm almost finished. They talk about how the gold florin was for the very wealthy, for the Medici and all those kinds of people. But the silver, I think they called it a picciolo, that was for the general public. But even then, they corrupted that coin. The merchants, they used to debase the coin, and so did kings. But if you look at the name of coins and currencies, the name of money, throughout cultures, it means silver. For example, plata, which means silver in Spanish, is also used as a word for money. Argent, which means silver in French, is also used for money. The currency of the UK is called sterling, pound sterling. Well, sterling is a fineness of silver, of course, 925. The dollar itself is derived, really, the word dollar derives from Tal, Thal, which means valley, which goes back to Joachim's Tal, which was a place in Bohemia where this nobleman, or whatever he was, Joachim, started minting his silver coins. And they started calling the coins thalers because it was from Joachim's Tal, or the valley of Joachim. And then the coin became so popular that the Spanish started minting coins similar, same weight, and they call it the Spanish dollars or thalers. And that's where the US dollar comes from. So yeah, silver has been money for forever, almost like gold, and I think it will continue to do so. I think it will reimpose itself as money, and I think it's a very good insurance to have for those who have been able to save. Yes, it's been a long road for me. I've been buying silver, not as long as gold. I started gold 2002, silver 2003. So let's have a look at the markets then. You probably want to know where silver is. You've probably seen it already. So right now, silver is at 16.30. It's up 43 cents or 2.7%. So let's look at a chart of silver here. The first one I'll bring up is the monthly chart. It goes all the way back to 2010. And you can see the spike to $50 in 2011. And this is where we are. We're not really anywhere near the all-time high, which that was. It matched the 1980 all-time high very closely. If you look at gold, of course, gold is very close, relatively close to the all-time high right now. So we've got a lot of room on the upside. Yes, we had that massive drop lower when everything was dropping. People were throwing everything out the window. They needed liquidity. Silver got down to almost $11, and we're now at 16.28. Is silver out of the woods in terms of market manipulation? I don't think so. They're going to come back and try to knock this thing down, but I think it's out of the barn, so to speak, right now, silver. So the key level really here now is like around 20 or even 21. I think we could get there very quickly. Silver, when it starts moving, it moves very quickly. In terms of the gold-silver ratio, I've got a monthly chart here, as you can see. We are at unprecedented levels still, even after today. The highest ever was back in 1991, January 1991, when we got to 102. Right now we're at 106, and we got as high as almost 127 in the gold-silver ratio. So that's the other thing to keep an eye on. I think we're going to get to 100 very soon. We just need to see silver, for example, trade up another dollar to like 1730 or thereabouts versus 1730 in gold, right? So gold is doing well as well, not as well as silver, and we know that a real bull market in precious metals needs to see silver outperforming. So right now gold is at 1737. It's up $7. It's up 0.4%. Gold in British pounds has definitely broken out. It's making an all-time high. It made an all-time high yesterday above 1400. It's now at 1423. So that's off to the races as well. The price of gold in euros is very near the all-time high of 1612. Last I saw it was around 1606 gold in euros. And gold is going to do well, or the fiat currencies are going to drop, all of them, dollar included, versus gold and silver. What about the markets, the stock markets? Well, yesterday was a weird day. Again, we see this a lot. Stock market is not doing well during the day, and then all of a sudden it just starts picking up and trades up on the day like over 300 points. Right now the Dow is up another 120. The Dow future, it's at 23,744. S&P is up 0.5% as well, the future. We had broken a key support there at 2790 the last few days, but it's managed to rebound. It's at 2867. I still don't think the stock markets are out of the woods. And why do I say that? Well, because if you look at the bond market, the 10-year yield is still at relatively low levels compared to the last couple of weeks. We're almost at 60 basis points. We're at 62 basis points, near that 60 basis points, which is a key support in terms of yield. What about the currencies? Well, sterling is down 0.1% at 122.15. The euro is up 0.1 at 108.15, and the dollar is down 0.1 versus the yen at 107.12. So you can see how they all take their turns to devalue against each other, but don't keep thinking about this dollar milkshake theory. The dollar is doing well versus fiat currencies, but versus gold, gold is outperforming the dollar since the dollar bottomed as per the dollar index in 2008. Gold at the time made a high at 1,031, and here we are at 1,700. Yeah, the dollar index has gone up, but not as much as gold has gone up against the dollar. Oil, pretty strong. We're at 28.80, the WTI, up 3.8%. So oil is continuing to go higher. I guess there's a point where the oversupply has to be consumed, and we're seeing the economies reopen slowly. So those supplies in Cushing, Oklahoma might be finally consumed, and we could see a little bit more demand. Who knows? But I would say oil as well, like the stock market, is not out of the woods. This is a short-term bounce, in my opinion. So there you go. Let's keep an eye on silver. Billy definitely is keeping an eye on silver. And if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.